Hey everybody, Jim Malone here, coming to you live on Dallas Trading Floor. Well, it is Monday, and a little bit of technical problems here again. Oh gosh, I have had so many technical problems, but we're up and running, and so here we go. Basically, what's going on here, of course, is the market is selling off. I was stopped out of a number of positions, and I just kind of want to show you kind of kind of where I'm at in terms of those positions. Um, basically, we have got an inflation issue in this country, um, big time inflation problems. As you can see, um, as of Friday, the inflation jumped about 6.3% in November. I suspect the December numbers are going to be even higher. And I think that we're going to get into a situation where it's gonna they're gonna the finally they're gonna have it's gonna get out of control. They're gonna have to raise interest rates, and of course that's going to slow the economy. So we want to still be very defensive as the market is in a situation where it is going to be more difficult to trade this market. Definitely more difficult to trade this market. Just kind of wanted to show you the overall market. The Dow was down again. Also the S&P and the Nasdaq. Basically the only thing right now that's holding up the Nasdaq, of course, is the fact that there's some large cap stocks like Apple, which are holding it up. Now, I wouldn't jump into Apple right here because I think that it's kind of a safe harbor for a lot of people, and it's sort of the kind of thing where I think we want to be super careful with stocks like Apple, just because you know a lot of people are jumping in. So I think it's extended. You got to be real careful in terms of that. So I think you got to be super duper careful. It's just a kind of thing where I've got stopped out of a lot of things. I was stopped out of a number of things. I only bought one thing today, and that's Invitation Homes, which is a company that leases. It basically leases homes. They have, I think, the largest in the country. They have over 10,000 single family homes that they lease, and I did buy them today. It's up today. I'll show you that in just a second. But overall, the put to call ratio, and this is what I kind of want to show you, the put to call ratio is definitely kind of bouncing around. There's a lot of volatility in the market, but when the put to call ratio gets up to 1.15, that means that kind of signals a reversal in the market, and that would be a movement down for us. So I think we've got to be rather careful about that. It jumped up a little bit in the last week, and then it pulled back, and now it's back up again. So we have to be real careful with exposure. I have very little exposure. I'm about 90% in cash, and so I'm taking it very very easy regarding my positions. Right now, it's the kind of thing where you just don't want to be too much in anything right now, just because the market is sort of it's sort of not rewarding. It's not rewarding positions that much. So we got to be kind of careful. I mean, obviously, if it turns, I will be the first to indicate everything. But we want to be pretty much in cash. I did sell a QQQ position today that I had a kind of a pilot position. I did sell it pretty much at even, but I don't want to risk it moving back. The QQQ, of course, is the ETF that covers the top 100 by market cap stocks um, in the Nasdaq. So that's where Google is, that's where Apple is, Microsoft, those kind of stocks. Those are the stocks really holding up the market. The rest of the market has sort of pulled back. So we got to be super careful. This is a stock that I did buy today. It's Invitation Homes. It is up actually, and kind of interesting. When this slide was taken at 43 17. Now I basically got into this at about 43, so don't have a lot. It's not up a lot today, but it is up. So hey, that's a good thing. I have a very tight stop loss at 41.30, so that if this pulls back, I'm out. But I'm just trying to get some exposure because I've been stopped out of quite a few positions as we speak. There is one stock out there that is the stock of the day. It's ANET. I'm not in it. Very high composite rating, 97. off of a flat base, and it does have a new relative strength of high of 98. So it's very, very good. I don't know if I would buy it right here just because I am skittish in the market in general right now. Kind of waiting for some direction to happen, either up or down. Just the volatility is tough to deal with. We do have that one spread on that iron that we do have a bull call spread on LSI, which is life storage. That's been doing fairly well, actually, believe it or not. So hopefully that'll hang in there. But just a volatile market. I did close the Iron Condor. I don't know if you saw that one on. I did have an Iron Condor options trade on Costco. Did very, very well. Costco came through earnings and it spiked, but it's pulled back again. So I'm glad I closed that one too. Just a tough market to trade. Here's currently what I'm in. Nike. I did sell one of my positions in Nike. I still have a covered call position. That's the last Nike position that I have. It's down $2.22, or about 1%. At 1% down on the volume. I'm in DR Horton. That has done pretty well. That's the world's largest home builder. The Trade Desk, again, I'm down on that one too. I'm down on Oracle. That's another one that I'm in. Danbury Research. The only one I'm up on today is Invitation Homes. So not the greatest when it comes to, not the greatest when it comes to that. Just kind of a sell-off in general. So without further ado, let's get into some of the questions here. Just sort of move that over and we'll get going with some of the questions. All right. So thanks for holding here, and thanks for Harris. Is Nvidia in a buy zone? That's a very good question. Let's take a look. I like Nvidia a lot, but this has just been a tough market to trade. And so, it's just kind of the thing where, it's been very, very difficult to trade this market just because it's really not either. It's kind of volatile and it's been moving, all the way around. So let's take a look at Nvidia. There we go. All right. Now, this is the NASDAQ composite set. It's pulled back a little bit. Let's take a look at Nvidia. That is basically saying, ouch. Fortunately, it's not in a buy zone. I wish I could tell you that it was in a buy zone, Harris. I really wish I could. No, this is not in the buy zone. This is pulling back. It's potentially testing the 40-day line and the relative strength. Even though it's 98, you notice this relative strength line, this blue line here, it's kind of going down. So I just can't say that this is in a buy zone. So Nvidia, it's just one of those things. Nvidia is not a buy zone. So I wouldn't buy it right here. It's just not in the buy zone. It's not in the buy zone here. Possibly if it pulls back to 230, that could be potentially. So it could be potentially where we could get in here, but no, it's just not in the buy zone right now. So yeah, I'm sorry for that, but no, it's absolutely not in the buy zone, and I think we just have to kind of go back to the drawing board. So let's see. Come up here to the next question. Let's look at Palantir. Hi, Roman. How are you? Let's look at Palantir. I don't think we're going to like I don't think we're going to like the chart on Palantir that much. Yeah, it's a very bad chart right now. It's tough in this market. There's just not a lot of stuff that we're seeing that's really worthy of that's really worthy here. But it really this one, again, we're in a downward trend on Palantir. Now maybe we'll find a bottom, but right now we just can't do anything here. We just can't, as you can see. Let's go to the weekly chart just to kind of see. Yeah, it's just pulling back. It's below. It may get some support at its IPO level, which was 7, but it's just not looking good. I mean, even though they've on the fundamentals they're doing great. I mean, on the fundamentals, it's doing very, very well as a stock. But other than that, not so much. So yeah, I can't really recommend that one either. Unfortunately, let's see if I can jump over. I just want to show you a stock that I did buy today. This is a tough market to buy in. There's not a lot to buy. The only reason I bought this one today, and this is Invitation Homes, and the only reason I bought it, first of all, is because of inflation, but it is in the buy zone and it has a cup with handle, almost a perfect entry here. Now that doesn't mean that I'm necessarily going to be able to hold it, but this is why I bought Invitation Homes today. It's the only thing I bought. Basically, I bought it to 43.10. As you can see, it's just up 7 cents. So really nothing. My stop loss is at 41.30. That's basically right here. This area is getting some love because it has a pretty strong checklist of 89. The only place it doesn't have is the sales. This is an inflation fear play. This is a play on inflation. Now, because it looks as if, at least in the short term, single-family homes, especially ones that are in Sunbelt areas like Dallas here, are going to get bid up because the rents are going up so fast. The average $300,000 home has a rent of about $2,100 here in Dallas. So this is why Invitation Homes is looking good. Again, this is not a play on strength, really. This is just a play because there's just so little else to buy right now. That's the main thing. Now I want to kind of show you one that I did sell. I was stopped out of Yellow, which is a trucking company, which is symbol YELL. There we go. Yeah, and you can see, and I'll show you the how it looks here. But when it broke below the 21-day line, that's this green line, I sold it. And the reason I did was because it may get support here, probably will, but it may not get support here either in this market. So you just got to be super, super careful, just with everything right now. Question from TikTok regarding NEO, and let's just take a quick look at NEO, see kind of what's going on. Yeah, very bad chart for NEO right now. It's trading below the 40-day line. Not a good place to buy it. All the Chinese stocks, you have to be careful right now. They're going to have a debt problem in China. That's what it's looking like. Again, I'm not an economist or prognosticator, but Evergrande, which is the biggest investment vehicle for people in, that's probably the right reason. Okay. Evergrande, which is one of the biggest investment vehicles for people in China, it's missed some bond payments, so there may be a problem there. So that's going to have a ripple effect with NEO and some of the other, unfortunately, some of the other Chinese stocks. So you got to be careful with Chinese stock right now. I'd be very, very careful being in Chinese stocks. If I was down more than 7% in NEO, I would consider closing it. And the reason I would is because I just don't think this is a good chart. And it's just something that you really can't do anything with that. I know this was last year NEO was an outperformer. It was totally excellent. This year, not so much. This year's been a tough year, relatively speaking, in the stock market. We're moving to some very, very defensive areas. So with NEO, I think that if you're down more than 7%, you should consider selling it because it does not, at least in the short term, doesn't look all that good. Let's look at CrowdStrike and Nike. Now I do have Nike still. I am still holding Nike NKE. So let's take a look at the chart. yeah, I have stopped out on one of my positions here, as you can see when it hit the red line here. It did bounce a little bit on this one. I have a little bit better convictions on Nike, but if it's going to go through earnings in 7 days, so more than likely I'll be closing my position because it could do poorly through earnings. But earnings for Nike are in 7 days. So basically next week on Monday is when Nike is going to come out with earnings, and it may do well, but it may not. As in the past, it has even with excellent results, it's pulled back. So I'm kind of expecting in the next 7 days for Nike to possibly pull back on earnings. So I want to be very, very careful. I'm going to be closing my position probably on it early, and the reason is, of course, is because this market has just been, it's been a tough market. I mean, I'll be honest, it's a tough market. This question from Jay. Thoughts on CrowdStrike, the only green stock on my watch list? Wow, that's tough. Yeah, I know. It's a hard day. It's been a tough day. It's been a tough day to trade because it's just yeah, and really this is not a true. I'm not trying to be a. This is not a true. This is not a true green area here, because this is just literally a dead cat bounce right on the 10-day line. So this doesn't really even qualify. So I mean, I wouldn't get rid of CrowdStrike, but here's what I would do. I'd be setting my stop losses very tight, probably probably in the 295, 296 area. That's where I'd be setting it right now. It's 298, so I would put my stop losses in right here, because I think this CrowdStrike may take another leg down, and that would be bad. But that's definitely probably gonna probably be the recipe here. Let's look at AMD. I think AMD has pulled back as well. All right, yeah, AMD. As you can see, I sold my position here at 149. It's basically now at 133. This is kind of why it's a good idea, if you can, to sell into strength. It's not always easy. I mean, I'm not saying it's always easy to sell into strength, but yeah, I basically on the 23rd I sold my positions in AMD, and it's pulled back. So the question is, how low can AMD go? Here's what I would do. I would probably sell my AMD position. I probably would sell my AMD position right now. A lot of people towards the end of the year are going to go into cash, it looks like. And we may have a market turn. But let's look at Airbnb as well. I would probably sell the AMD just right now and see, and wait, because it'll come back. I'm sure of it. But it's always prudent, especially towards the end of the year, to kind of if it isn't acting right, then you should sell it and wait for a better entry. So basically, yeah, this is pulling back down to the 200-day line. Relative strength 75, not looking very strong. But then again, most stocks aren't looking strong here. So there's only a few areas of the market that are kind of strong. Let's kind of take a look at the strength in the market right now, because I've been talking about weakness in the market. We should look at strength, because that's always a good thing to look at. Now, according to what I can tell, the top industry group right now is, let's see if I can get it up. There we go. Is electronic semiconductor fabless. So, this is probably, it pulled back a little bit today, but there's got to be something in this group that's going to be worthwhile. Qualcomm, I think, is probably pretty good. Yeah, I'm excellent. Rambus. Let's take a look at Rambus. I probably sold Rambus too early. Yeah, see, that's where I sold it. That's probably where I bought Rambus too early. But you could probably Rambus probably is a stock that you could buy at this point. I think it's going to get some support here at the 10-day line. That's probably not a bad place to buy it on a reversal. It's not an expensive stock. It's only $28. But that might be one that you can look at. It's one of the best in the number one sector. The number one sector right now is the semiconductor fabless. And of that, the best stocks pretty much are, Rambus is definitely in there in that sense. Let's look at some of the other ones just to kind of see. If we can find out. Yeah, Qualcomm, MaxLinear, Broadcom, and Rambus. Um, you know, and let's just check in on Qualcomm because that usually is the leader. Yeah, it's a little extended, but very good chart, but extended, and it's pulled back. So really, that's kind of going to be, at least for right now, if you want to be in the market and want to have a little bit of exposure, um, that's going to be your best. That's going to be your best bet. Hans is asking, is Nvidia in the buy zone? And that's a good question. Unfortunately, it is not, Hans. I wish it was because I would be jumping on it if it was. Believe me, I would be jumping on this if it was in the buy zone. But it is not. It is extended. What do I mean by extended? Well, the buy point on Nvidia is 230.43, and as you can see, 5% above that, that's considered the buy zone. You see, from there to there, that's the buy zone. Okay, so it's pretty thin. It's way above that. It's pulled all the way up, and then, so basically, if you've got in it, as I did here, at if you got into it, then you probably should have been taking some profits because that's the profit taking zone. So, but right now you really can't buy it. It's extended. So if you did buy it at this level, it more than likely would pull back on you, especially in a market in correction. You got to be careful with this. So right now, Terrace, Nvidia is not in the buy zone. So that's just the long and the short of it. I mean, you can obviously buy it here, but be forewarned, it's not in the buy zone. So you could suffer a lot of damage if the market pulls back on you. Basically, the reason you don't want to buy them when they're not in the buy zone, especially in a volatile market, is because if the market pulls back, and it looks like it is, then you can lose an awful lot. So you have to be super careful on that. Let's look at Samuel BLMN. See if I can BLMN. See if that comes up. Bloomin' Brands. I wish it was blooming better, but unfortunately, this does not look like a bloomin' good deal. It looks like not a blooming good deal. Okay, let me just kind of point out something here. Just kind of want to show you this. Whenever the 40-day line crosses below the 200-day line, like it did here, right from here, this is what they call the death cross. That means it's likely to move lower before it obviously moves higher. Now, it has moved lower. The question is it going to reverse higher? I don't think so because it's got a relative strength of 20, so it may take a long time. It may take 6 months to form a base where it can move up. But right now, you just can't buy this one. It's not in a good area. It's basically below the pivot, and it's 8% basically below where it was 530 days ago. That's 2 years. So if you kind of go to the monthly chart, you can see. Just not a good look. This is not where you want to buy it. It's in a downward trend. It's in a secular downward trend. So Samuel, unfortunately, I would not buy that one. Just would not buy Bloomin' Brands. So I just, I can't recommend it. PLMN. I can't recommend it, unfortunately. Can't recommend it. So I can't really recommend this stock. It's just I don't think this is. I don't think this stock, unfortunately, is working right now. It's just not a place that we can do anything with it, unfortunately. So, thoughts on oil stocks? Great question. Thank you for that very much. Let's look at some oil stocks. I'm going to go over what I'm going to do here. So I'm going to go to my list here of all of the sectors of the economy. I'm going to look for the first and the best oil area. Now, oil did pull back a little bit, but with the inflation numbers that we're looking at, oil is not a bad place to be. Now, I'm still in Denbury. I think that's the only one I'm in. Let's kind of look at the daily chart. This is the entire group here. So I kind of want to show you this. This is the entire E&P group, the exploration and production group. It has still above the 200-day line, which is good, and it has lost a little bit of support at the 40-day line, but I still think overall this group is pretty good. The top stocks right now are Denbury, which I do have. It pulled back a little bit today. That's this right here. So this is one, if this can bounce here, then maybe I might do something. On Friday, I bought a full position in Denbury at 84.14. Now, look, it's pro black almost $5. So, even though I think I was not a bad place to buy it, it wasn't a great buy. Hopefully they'll get some support here. If it doesn't, I'm going to be stopped out of this basically very quickly. It's just a tough market. So even if it doesn't, I'll be stopped out at 78. I'm only $1 above where my stop loss is right now. So, so we'll see if it lasts tomorrow. I hope so. It's just that right now it's tough. And Denbury is one of the best. It's got a 100% checklist. So, and it's struggling. So, it seems like many things in the market are struggling right now. I don't think I would recommend the oils right now just because of the market. I want to see some better setups really before move back in. I really would like to see some better setups. All right, let's look at you. This is this is a software company, Unity Software. It's looking. It is in a downward trend, so I can't really speak to it all that well. We're still above the 200-day line. I just wouldn't buy it. I wouldn't buy this one right now just because it's in a downward trend. So, I can't recommend you. But, in a downward trend. So yeah, unfortunately, it's hard. This market right now is definitely hard to trade. I'm pretty much in cash right now. Oops. So maybe that'll work. Okay. Yeah. So yeah, U is in a downward trend, as we can see. So I could recommend this now. I'm mostly in cash right now. And the reason I am is I'm just waiting for the market, hopefully to turn higher, and then I will be buying again. But right now I'm not. Right now I'm kind of in the sort of in the search mode. Yo. Hey, thanks. I'm up under 50. Oh, hey man, thank you. Thank you. Yes, it is time to walk on the watch list. Thank you very much for that. Yeah, I mean, I appreciate you watching very, very much. Please tell your friends. Please tell your friends about it, because I need to build some more people. But thank you. Yeah, I mean, you got to be in cash right now. Unfortunately, I'm in very, very little stuff. I'm in cash. Just one of those things. Just one of those things out there. But thank you so much for those kind comments. Appreciate it very much. PG, I guess it's P&G, right? Procter & Gamble. This is a very defensive play. Goldman Sachs today came out with a recommendation on Coca-Cola KO. Whenever they do that, that is a sign, my friends, that, oh, by the way, if you're watching CNBC, be careful listening to Jim Cramer, because, I mean, I'm not trying to throw shade on him, but I tell you what, he's making noise like he did before when Bear Stearns went under. I don't know if you remember this. You probably don't, but 9 days before Bear Stearns took a dump in 2008, he was recommending, don't sell Bear Stearns, don't sell Bear Stearns. And of course, 9 days later, it collapsed and bankrupted. I'm not saying that's going to happen, but we're sort of on the bubble. All the big banks, all the big investment banks are recommending what I consider consumer staples, like P&G, Coca-Cola, companies, Clorox, companies like that. Whenever this happens, whenever they're out there recommending these kind of stocks, that means that they can't find any leaders, and they're just going with the absolute defensive of the defensive. And that's kind of what P&G is. Now, is P&G a bad company? No, it's a great company, but it's not a growth stock. It's just not a growth stock. And right now it's just, yes, it is above the buy point. Yes, you could buy it. It's a little extended. Probably given the circumstances, it's one of the best stocks out there, but it's in consumer personal care items. This is not a great area. Yes, you can buy this. I wouldn't do it. I wouldn't buy this one. We're gonna get some opportunities, hopefully, when the market starts moving down. I've been looking at Citibank for potential short. I want to show you that right now, because it's starting. This is Citibank. It's starting to show. This is the death crust, by the way. I always like to put that in there. That's the death crust. This is pulling back, and so this may be a bear call spread. I haven't put one out. I will. If you're on the list, if you're on the action trade list, I will send out bear spreads, because I think that's where we're going to have to move to make money in this market. We're probably going to have to go to some bears. We're going to have to do some bear stuff. I did close a bear spread on Zillow successfully. I'm going to look for Open Door and possibly for Citibank, but I do think we're in a situation, now where we may be, who knows? I'm hoping we're not topping out and we're not going to pull back, but it's looking kind of that way. So I think we got to be careful. I just think we got to be careful about the way we're trading this market. It's a tough market to trade, and I think we got to be super careful. It's good to be in cash right now. It's good to be in cash. That's all I can say. And we do, and as individual investors, we do have an advantage over. We do have an advantage over the funds. The funds have to be invested pretty much 100% at all times. We don't. We can use cash as a hedge, and I think that's not a bad place to be right now until we get some more market direction. That's the key. All right. Due to the current volatility, is it a wise move? No. I think, Harris, I'm actually moving out of the QQQ into cash, because I think even the QQQ may have difficulty. Here's kind of the rule for the QQQ, and this is a great rule. If you can follow this, I can almost guarantee you that you can beat about 20 to 30% of the hedge funds out there every year. And here's the rule. If the market is in a correction, like it is now, unfortunately, you want to be 100% out of the QQQ. If the market returns to a market in confirmed uptrend, then you want to buy the QQQ. If it's a market that's in under pressure, you want to buy 50. You want to sell 50% of the QQQ. So right now is not a good time to be in the QQQ due to the overall market condition. The overall market condition right now is unfortunately, it's in a correction. So probably don't want to be into the QQQ. We probably want to be selling stocks, getting into cash, building the watch list, waiting for the next opportunity. The one thing that you might, if the market turns over and it does go into a full on change up, the SQQQ is not necessarily a bad place to be. I'm not sure that I want to open an SQQQ position right now, just based on the volatility. And this is the SQQQ chart. But if the market does really move against us, this might be a great place to be. Right, it's starting to move up a little bit. Still not the time to be in it, though. Still not time to be in it, but every once in a while, it can be a good thing. So let's go to the weekly chart, kind of show you. Oops, let's go to the monthly chart. Just got to see. Yeah, this has sort of been. This has been the SQQQ for most of the time. Now, most of the time, you don't want to be in the SQQQ. Most of the time, but every now and again, when we have a market change, when we have a market direction change, that's when you want to be in it. But right now, I don't think it's the time to be in it. It's because we haven't totally corrected. So it's tough. But just keep on that. All right. I guess we all crypto. Well, actually, I wish we could go to crypto, Martian. I wish we could. But right now, let me show you this. Right now, the GBTC is selling off too. That's the Grayscale Bitcoin Trust. This represents about 4% of the world's Bitcoin, and it's pulling back too. So that's not necessarily a good place to be either. Right now, I'm afraid it's pretty much inflationary items or cash. That's really the best performing group right now, at least from what I can tell. And this is sad because it's not normally a great group. Is the Reits. The Reits are doing fairly well. I want to kind of go over the Reits with you. There seems to be some love in the Reits right now. This is not a favorite of mine. This is not a favorite area for me. I've never really liked the Reits, but when you don't have anything else to invest in and you need cash flow, the Reits can be good. So I'm going to go down here to the Reits and see if I can get that here. Right. Let's see if I can. Yeah. Let's see. It's Real Estate Investment Trust. Of course, that's the REIT. Let's see if I've got that. Yeah. Well, let me just put in a REIT, and then I can find out the group. So that's the easiest way to go. LSI is a REIT. It's a storage REIT. It's doing fairly well, by the way. It's doing fairly well. The REIT group is 56 out of 197. So let's look at that group. Let's look at the REIT group. And this is where there has been some strength. Actually, this is one of the only areas that I've seen last week or so that has been fairly strong, and that's number 56, and that is the REITs. So let's get to 56. There we go. Okay. No, that's chemical. Why did I get that wrong? Well, let's look at LSI again and see. So it's going to hopefully give me no, it isn't. All right. So let me show you one stock that is doing strong. It is strong, and I did do a bull call spread on it, by the way. And this is Life Storage. It's a REIT. It's a very boring company. They operate self-storage. Self-storage typically does well in times of uncertainty. It's a 96. Now, can you buy this thing? Well, it's not the greatest buy in the world. I'll be honest with you. It isn't a buy zone, though. This one isn't a buy zone, and they've had some very good. Their profits are moving up 11%, 16%, 28%, 36%. So their profits are moving up. People are going to be, because of the uncertainty and the moving, a lot of people are going to be moving into, they're going to be moving out of their apartments for cost reasons, and they're going to be possibly moving. So REITs. So having again some issues with this. Hold on. Sorry. I need to do these. All right. Okay. Time being, sorry about that. My phone fell off the desk. So yeah, I mean they're going to be the strongest. But you got to be careful with crypto, because crypto, there's probably a lot of people are going to take profits in crypto before the end of the year. So be careful there. After the first of the year, I think we can probably go back in, but it's just tough right now. All right, let's look at Fortinet, FTNT. That is in a buy zone. Wow, look at that. Interesting. I do think this area will, even if we have another COVID lockdown, this one probably will do fairly well in that. It's in a buy zone right now. Very good stock. The last buy point on a flat base was 322 on this. Very good area. Computer software security area, 17 out of 197. So it's a pretty good area. You possibly could buy this. You possibly could buy this. I'm not going to be buying this one right now, but this is not a bad one to buy. It's on, I think this is a first stage base. No, it's second stage flat base. So this isn't necessarily a bad place to buy it. So I would say you could possibly buy Fortinet. I'm not going to be buying this one, but you could make the case for that. Let's look at Roblox. RBLX. Roblox. This is, of course, also gaming, along with Unity. Um, I mean, it's kind of hanging out right above the buy point. It's giving back a lot. I don't know. I'm not. This is not really a good entry point either. I probably wouldn't buy this one either. I'm afraid to say. Sorry about that. All right, good question. What's the situation with Tesla? It went up from a buy point of 900 and is now currently back to the buy point. Yes, I think you're so right about this, Marcia. By the way, this is one of the reasons why I always recommend pushing your stop loss up. I know that I know this isn't this. A lot of people don't like this, but this is how I play, and the reason I do is because this happen a lot with stocks. You get the stock will move in 3 months. It'll move it'll move more than it'll move in 3 years. Now that's not necessarily the case with Tesla, of course. But the thing about Tesla is Tesla tends to give back. Tesla tends to give back a lot of its gains. So you got to be selling in the strength of Tesla. And as you can see, I basically when it pulled below that 21-day line, I was out. I think you can see that mark there for me. It's now at 950, 957. It's probably going to come right back down to the buy point, and it's probably going to hang out, and it's probably going to form another base. So, I mean, literally, we could see this thing forming a base for another, 3 to 6 months, maybe. It's just I wouldn't use the 900 buy point for Tesla. I wouldn't use the 900 buy point for Tesla because I just want to. I don't think it's relevant. I mean, I think it's a little bit too far out. I think it's got to form a base and see what happens. I don't know if you can see this here, but what will happen is it'll come up and then it will base, and then it will base, and then it will start rolling up. So really, what you have to do is you got to wait on this one. 900 was a great buy point, and I was in it. I made good money. I made very good money on Tesla in October and November. I did very well in Tesla, but then I really haven't been able to catch it since then. So I think you really just have to. We're just going to have to wait. We're just going to have to wait, unfortunately. That kind of sucks. So, it's. The market has been great. Yeah, absolutely. We're not in a bear market technically. We're not in a bear market technically, but we're getting awful close. That's a very good observation. It's a very good observation. We're getting awful close. That's why I'm getting ready. I'm getting in. I'm getting into as much of a cash position as I can. And when we go into a bear market, we will. I'm pretty convinced of this. When we get into a bear market, I will be. I will be looking. I will be looking to. I would be looking to short. I really will. So, that definitely is going to be, in my bag of tricks. I'm going to be looking to short when we. And I do think we're going to get into a bear market. I think it's very likely. I think that we've got a lot of political headwinds. We've got a lot of inflation. I think we're going to have a fair amount of. I think there's going to be some defaults on bonds in China, and I think that's going to be a major issue. I think that's going to happen next year, and then we could have an invasion of Taiwan. So I hope that doesn't happen, but it's looking more and more like that. More and more like that. All right, let's look at Bitcoin. I definitely think we should definitely take a look at Bitcoin. So what I'm going to do here is I'm going to jump out here and kind of take a look because unfortunately my charts don't have the capability of showing you Bitcoin. I wish they did. I'm going to have to work on that, but I'm just going to show you the sort of the chart for for Bitcoin. Let's take a look at it right now. So here is Bitcoin, and it is down again today. This is not a good sign. As you can see, it's pulled back here. If you can kind of see where I'm going with my cursor there. I do think that Bitcoin is going to probably sell off even more. It sold off a little bit today, down about 6%. And part of the reason I think Bitcoin is selling off is not because it's not because it's not a good investment. I think it is, But I do believe that right now, towards the end of the year, people are selling their Bitcoin so that they can get cash so they can pay their taxes on their Bitcoin, on their capital gains on Bitcoin. That's kind of what I think may be going on here. I don't know. I don't have any. That's anecdotal evidence. That's not based on anything factual. But I do think there are some people that have made tremendous gains in Bitcoin in the last year or so. Because if you look at the year to date, we were all way up here at 60. We started at 30. So, even if you started at the beginning of the year and you're there in there now, you would still be up just a whopping 50%. Even if you didn't, even if you just rode it all the way through, you'd be up a lot. I do think a lot of people are going to have capital gains. By the way, this is why people are moving. One of the major reasons people are moving to Puerto Rico is because they don't have to pay that capital gains tax on Bitcoin profits, capital gains. So I do think that's part of it. We're coming into the end of the year. I think people are going to be selling Bitcoin so that they can pay those capital gains. Other than that, I think that, we have to wait. And I think if Bitcoin pulls back to 30,000, which it very, very well may do. I mean, it was basically 30,000, in September. So, I mean, if it pulls back to 30,000, then I think we've got to consider possibly getting into it. If it gets support at 30,000, I think it might. I think it very, very well might. I'm gearing up to do that if it pulls back that much. But right now, I think you've got to be a little bit careful. I mean, it's up 20% in 6 months, so that's pretty darn good. But I do think it's going to adjust down, and probably see hopefully some support at about 30,000. That'd be kind of where I'd expect it. So that's kind of really kind of what I have to say about that. Let's look at Lucid, and let's see if I can get Lucid up there. Let's see, LCID, I think it is. This is one of the IPOs that I did not do anything in because I think it's a great idea for a car. I think the price point is excellent, but I think that it's just the EV space is a tough one now because it's become so crowded. It's just kind of moving down there. So right now, automobile manufacturers doing very well. It's 4 out of 97, but Lucid not so much. Could you enter it here? Well, it's got a relative strength of 99, but it is extended. So really, the thing about it is that right now, Lucid is. I mean, the stock is extended. So I mean, I just don't think you can do anything here right now. So basically, LCID is extended. And you don't want to buy a stock extended. And the reason that you don't, it's not because it's not the right stock. The reason you don't want to buy extended is because when the market pulls back, it's going to pull it all the way back down to the pivot, and you're going to lose all that profit if you don't have a stop loss. See, that's what happens. That's why you want to buy at the pivot, and then as it moves up, then you want to move your stop loss up, and then eventually it's going to pull back, and you'll make all the money. But see, that's a hard thing took me a long time to learn that lesson. But to buy at the pivot, and then as the stock moves up, you want to keep pushing your stop loss up, and eventually you're going to get to the point where it's going to pull back, and it's going to stop you out, and you're going to say, "Geez, I can't believe it," and then it's going to go back down. But right now it's in a downward trend. So Lucid, I don't think you can do anything. It's not in a place you can. It's not a place you can buy it right now, unfortunately. All right, great question about puts. If we are on a correction other than puts and bear spreads, is there anything else we can do to make some money? Absolutely. We can short. You know what I like to do when we're in this is to short the actual indexes. So like say, for instance, we're pulling back, possibly consider shorting the spider. That's a good way to go. I mean, literally shorting it. And the way you do that is you just go into your account. Very easy to borrow the spider and the QQQs, and just sell it. Basically, just sell it, and then hopefully it'll move back. I mean, you've got to be in the right. We have to be in the right. Shorting is more difficult than buying long, but yeah, it absolutely can be done. I like to directly short the indexes because they typically move slower. That's the reason I like to do them. We can, but if you're doing individual stocks, bear put spreads are great. They really are because they're a defined risk. Or you can just do puts. I recommend bear put spreads only because they limit your exposure. That's the main thing. It's not that you can make more money with doing puts, but you don't have as much. Unfortunately, you don't have as much protection. That's the key. So I like the bear put spreads primarily, and you can do bear call spreads too, as well. You can also do bear call spreads. Let's go for Jeff because I've been buy now or wait for. You know what? It would be. I wish I could recommend buying Apple right now because I don't. I'm being so negative today. I'm just saying no, no, no. That's not all. I hate that. But right now, unfortunately, Apple is extended, so you can't really buy it at this level. It's just, it's sort of one of those things. If you didn't get on the boat, you got to wait until the boat comes back to shore because, right now, Apple is extended. Unfortunately, that's the case here. So it's extended, and we can't really do anything right now. So Apple's extended. I wouldn't buy it at this level. Just would not buy it at this level. All right, we've got a question from TikTok. What do you think of Jibby? JBI? Probably not very good. I mean, not to. Let's take a look. I haven't looked at this symbol. I'll be honest with you. Janus International Truck Supply. I mean, it's okay stock, but it's in a downward trend. I wouldn't buy it. This one is in a downward trend, so I would not be a buyer of JBI. I just would not be a buyer of JBI, even though they're in the self-storage building solution business, which is doing well. I just don't think you can be a buyer of JBI. It's in a downward trend. What do you think about Carnival Cruise Lines? I can tell you right now what I think about Carnival Cruise Lines. Good luck. It's just not a good stock. I know that everybody likes it. I mean, a lot of people like it, but this is a horrible chart. If you want to see a really bad chart, this is one of them. This is Carnival Cruise. It's not a very good chart. It's below the 200-day line. I know a lot of people know it. I mean, the reason is they do a lot of advertising. They're well known, but it's not a good company. Cruising is not going to come back. They're not going to be profitable for at least 3 years due to this COVID thing. And if there's another shutdown, we could see some major bankruptcies in this area. So I'm not trying to throw shade, but I would not be a buyer of Carnival Cruise Lines. Thank you, sir. I'm in the self-storage business. There's the best around. The self-storage business right now is one of the good defensive plays. Right now, I have a spread on LSI, which is Life Storage, which I think is a good one. There's some good stuff in this area. It's the only bull call that I have right now, bull call spread, and it's on LSI and it's in storage. And I do think that storage is one of the better areas. I also think that there are also some other REITs. I did buy Invitation Homes today, though it's not a REIT. They are the biggest renter of single-family homes in the United States. That's the kind of things that right now are being favored in the market, unfortunately, or fortunately, depending on how you look at it. The REITs and the self-storage REITs in particular are doing very well. There's a lot of REITs, though, that I wouldn't touch. The office REITs, the shopping center REITs, I think these are just radioactive. But the storage REITs are very good. Cube is also another good one. And again, LSI, and of course, everybody knows about Public Storage. Those are all three really good ones. Also, and Extra Space Storage, too. That's another good one, too. So the self-storage industry is a good industry, especially in hard times. And I do think that we are coming into we're coming into lots and lots of inflation. That's going to be a boom for the storage industry because it's going to force a lot of people out of their apartments and homes. They're going to put their stuff in storage, and of course, several months later, they're going to be auctioned off. But that's kind of pessimistic, but that's kind of what I think. So I think, at least in the short term, if we have all this inflation and we have a lot of displacement of people in this country, which I do think we're going to have, storage is not a bad place to be invested. Not a bad place to be invested. Let's see. I've owned storages and rentals for years, I've never had higher demand. Absolutely right. Absolutely right about this. People are getting knocked out of their apartments. They're going to storage. This is one of the few areas of the market right now that's doing very, very well, and that is uh, rental homes, especially single families, invitation homes. That's the one that I particularly like, and your self storage. The self storage very good too. Also, there are some REITs that are involved with cell towers, and American Tower is a good one. Those ones are good too because those are good too. But self storage, just a great area. Self storage is typically good. In good times it's good, and in bad times it's good. But right now, especially in bad times, it's very good because it typically very strong cash flow. So, congratulations. I wish I had. I tell you, I wish I had more rental units. I have a few rental units, but not. I wish I had a mini storage. To be honest, I don't have that. Why is DK? Why is DraftKings getting slaughtered? Good question. Uh, it's just that the problem. The problem with a lot of these stocks is that they just got over their skis. They're not. DraftKings is not a bad idea in terms of a stock, but there's a lot of competition. From Caesars, Penn National Gaming, all very good names, all very good names. But this is why when a stock trades below the 200-day line, you got to be super careful on it. This is trading below the 200-day line, so right now you just can't. We're just gonna have to wait on this one. And I know a lot of people have. I was in this one last year heavily. I mean, I last year I was in DraftKings a lot. I was in DraftKings a lot, and I did fairly well in DraftKings. But it just everything has its season. When DraftKings broke below 55, that's the 200-day line. That was kind of a warning sign. Go to the exits, leave right now because it's going to go lower. And it looks like it's going to go lower. It looks like it's going to go all the way down to below its IPO price. Its IPO price. Oh goodness, where is it? I think the first. Yeah. So yeah, you just can't even with their sales, their profits have been down. So it's a tough row with DraftKings. This is primarily why you should never, even though Jim Cramer and all these people will tell you to buy on the dips and all that, never buy on the dips. Never buy on the dips. And the reason why is because you don't know if it's going to be a dip or it's just going to be a rest stop on the way on the elevator down. On the elevator down. I think right now right now the market is in correction. We could get into a bear market. Bear markets, they don't last all that long typically. We can make money in bear markets, but right now we're sort of on that edge. When you're on that edge, it's tough because that can be a tough time. You don't know if it's going up or down. It's volatile, and so it's tough. It's just tough. Let's look at one of the safe haven stocks, and that, of course, is Microsoft, MSFT. And along with Apple, this has really been a safe haven for a lot of the big funds that have to stay invested. Many of the funds, they have to stay pretty much 100% invested. So when the market gets weak like this, there tends to be a crowding effect. They tend to crowd into the mega cap techs. Obviously, Microsoft is in that category. Actually, Microsoft looks fairly good. It is extended. I wouldn't buy it at this level, but Microsoft is holding up. Microsoft is holding up, and along with probably Google, those are your two best mega cap stocks. Now, I don't own it currently. I haven't owned it since October. I was in it in October. I wrote it up, and then I sold it. But I think it's gonna hold up fairly well. Not a good place to buy it though, because it can come all the way down to 305, which is the buy point. Excuse me. Sorry about that. All right. Why are people putting money into Pepsi? Very good question. It's a very good question. The reason they are doing this, as well as Coca-Cola, KO and Pep are doing well, because when the big boys don't know where to go, they go to consumer staples. Consumer staples typically are a safe harbor. You're not going to make any money on them, but you're not going to lose any money on them. That's why PEP is doing good, because if you look at the packaged foods area, this is a horrible area. It's 157 out of 197. So in terms of a group, this is not a very good group. But because the market is in correction and is selling off, these companies that have to be 100%, these funds that have to be 100% invested, they go seek safe harbor. And those typically are the consumer staples. Procter & Gamble, Coca-Cola, Smuckers. I could just go down the list. Clorox is another one that tends to be in that category. So this is a safety play. Don't view this as being. Don't view this as as anything bullish. When you see consumer staples doing poor, when you see consumer staples doing well, that's a signal, and that's a signal that the market is getting weak and people are pulling out. So I think it's better to be in cash rather than in consumer staples right now. So he has COVID. Hope not. I hope not. Well, I have ivermectin, so I should be okay. Well, everybody, I've gone a whole hour. A little bit of technical difficulties getting the cameras working this afternoon. But I'll be back tomorrow at 3:45. Thanks everybody for taking a look. If you want to get on the action trade alerts, I probably will have I probably have a watch list to come out probably today or tomorrow. Very easy to get on that. Just go to www.dallastradingfloor.com. If you are interested in the Discord room, because we do, when trading starts every day, I'm there and trying to analyze as many setups as I can in the morning. That's in the morning. That's also available. If you're watching on TikTok, you can just go to the to my profile, click on the link, and you'll see it. It just says Discord room. That is a paid service, but we have a lot of people that have done great with that service and made some money, and hopefully we'll be making some money in the future. But we also have the action trade alerts at DallasTradingFloor.com. So I will see you tomorrow at 3:45. Thanks everybody for dropping by. Happy trading. Hope everyone's doing good, and I will see you back here tomorrow. And thanks everybody for taking a look at my little show. I will be back tomorrow. Let's see if I can get one more question in. Thank you very, very much. Thank you for watching. I so appreciate it. Let's see. There are actually one or two stocks that you actually like the chart, which you would recommend. Absolutely. Thank you, Jeff. There is one stock that I did buy today, and I'll show it to you, and that is Invitation Homes, INVH. Now, I'm not saying this is a great stock, but given the overall environment right now, I think it's a pretty good stock. I bought a full position today at 43.10. It basically closed at 43.17, and then after hours it's at 43.10. So basically it's did nothing today. It just stayed the same, but it is in a buy zone, and it is in a particularly good area of the market. I think that should do well even in a recession and even in a correction, and that is Invitation Homes is the largest owner of single-family homes in the United States for rent, and they have about 10,000 homes. And rents, at least here in Dallas and in Atlanta, where Invitation Homes primarily operates, are going up tremendously because everybody's moving here from California. So the average rents for a home that costs $300,000 to buy is approximately $2,100 a month, which is incredible. I can't believe it's that much, but it is. And so that is why they are doing really well. Another area that's doing well is the storage area, the storage REITs. This is another one that I do like. It's LSI. It's not quite as in a good place to buy it because it's a little bit extended. I do like this one, and the reason I do like LSI, frankly, is because in tough times, storage does very well. This is a very good technical setup and has strong cash flow. This is something that definitely want to look at. It's 100% checklist. It's 100% checklist on this one. LSI is life storage. On Invitation Homes, INVH, this one is also very strong. Not as strong as Life Storage. But it's very, very good. It's got an 89 checklist. It only misses on sales. That's the only thing it misses on. But I suspect the sales will do even better because it's very likely that the rates are going to go up for their rentals. So I will be back tomorrow. Thank you very much for watching, Jeff. So appreciate it. I'll be back tomorrow at 3:45. And happy trading, everybody. And I hope everyone is doing well. Oh, by the way, please like this because it helps me get out there to more people. And I will see you tomorrow on the flip side. Happy trading.